Smart money concept is not just a regular entry and exit in the market, but identifying the important point to enter a trade where financial institutions drive the market as well as profiting from those positions. As in today's video, I will be going over an amazing supply and demand strategy that makes use of the smart money concept. This strategy would give you total insight in market, as it absolutely has a high win rate. We used the momentum oscillator with divergence level to identify potential entry levels in the market. And to prove that this strategy is really amazing, I will be backtesting it 200 times with an account size of $1,000. So make sure you watch till the end, as it can also be applied on Forex, stocks, and even crypto. Do not forget to smash the like button and subscribe, as it motivates us on the hunt for the Holy Grail. Okay guys, so for this strategy, we are looking at the United States dollar Japanese yen. And we are on the 1 minute time frame. So for this strategy, we would be using two amazing indicators to scalp the market. These two indicators achieved a high success win rate. So we decided to share it with our community on YouTube for free, so they can start using it immediately. Now let's quickly go over the conditions for this strategy. But before we do that, let me briefly explain what we see in the chart. These lines are not support and resistance levels, but divergence levels, as their choices have an impact on the behavior of the channel. More generous level prices like the default low and high selection will produce more conservative channels. Then this indicator will serve as our momentum indicator, as it will gauge the market movement for possible entries and reversal. Now for a buy signal to be valid, we need to first see the momentum indicator close below the red line. Once we have these conditions met, we will then wait for the next divergence channel to form, as we will be entering a buy trade at the peak of the candlestick that closes above the upper divergence channel. So we see we met our conditions here, as we see we had the momentum close below the red line. And our next divergence channel was at this point. We then waited till we got a new close on the candlestick above the divergence channel. Please note that we mean to see a close of candlestick, as the candlestick wick above the divergence level is not a valid condition, as this tends to be our trigger candlestick. We would therefore enter trade at the peak of the trigger candlestick. Now for our stop loss, at first, we would be using the lower divergence channel level as our level of stop loss, but the trigger candlestick would be used as our calculation for stop loss risk. And take profit would be 2 times the risk. Now how this works is this: once we get our trade triggered, and we have any candlestick that goes in our favor, without touching the upper divergence level, we would adjust our stop loss to the bottom of the trigger candlestick. Now I know we are risking more on the market, but with this strategy, we only noticed trade close below the lower divergence level, when we had our stop loss on the divergence lower level. But looking at the brighter side, we had a lot of advantages using it this way. So make sure you apply this strategy properly to achieve the desired result. Let's go over more examples to make you better understand how this strategy works. So here is another valid buy entry we would have taken. We see we had the momentum below the red line at this point. Then we waited till our new divergence channel formed at this point. We then trailed our entry till we got the close of the candlestick above the upper divergence level at this point. This tends to be our trigger candlestick. We then had to place a buy trade at the peak of the trigger candlestick. Stop loss would be at this lower divergence level, till we get price action close above the divergence upper level without its wick on the divergence channel. And we see we got it at this point. We would then adjust the stop loss to the lows of the trigger candlestick. Do not forget to use the candlestick as the risk value. Take profit will be 2 times the risk, and we see it was successful. This strategy has a high win rate as it saved us from this ranging market. As we can see, our momentum indicators saved us from a lot of choppy market that would have led to a lot of drawdown in our account. Now here is a valid rule for a short position. For a sell signal to be valid, we need to first see the momentum indicator close above the green line. Once we have these conditions met, we will then wait for the next divergence channel to form, as we will be entering a sell trade at the bottom of the candlestick that closes below the lower divergence channel. So we see we met our conditions here, as we see we had the momentum close above the green line. And our next divergence channel was at this point. We then waited till we got a new close on the candlestick below the divergence channel, as this tends to be our trigger candlestick. We would therefore enter trade at the bottom of the trigger candlestick. Now for our stop loss, it remains the same as our long position. At first, we would be using the upper divergence channel level as our level of stop loss, but the trigger candlestick would be used as our calculation for stop loss risk. And take profit would be 2 times the risk. Now how this works is this: once we get our trade triggered and we have any candlestick that goes in our favor without touching the lower divergence level, we would then adjust our stop loss to the top of the trigger candlestick. And we see it was successful. Make sure you apply this strategy properly to achieve the desired result. Here is another valid sell trade we would have entered. So we see we had the momentum close above the green line. And we can see we have a new divergence channel form at this point. We then had to enter trade at the low of this trigger candlestick as it closed below the lower divergence channel. Our stop loss is at the higher divergence level. But when we have price action close without touching the divergence lower line, we would adjust the stop loss to the top of the trigger candlestick. Take profit levels remains 2 times the risk. And we see it was successful. Let's now go over the indicators used and the settings we applied on them. For the first indicator, bring up the indicator panel. I want you to search for the Squeeze Momentum Oscillator by Lazy Bear. And for the second indicator, I want you to search for the Oscillator Workbench chart by Luckf. Now let's go over the settings we applied for this indicators. For the Oscillator Workbench, double-click on it to bring up the indicator panel. On the divergence levels, I want you to change these to white. Now go ahead and untick the color bars. When you are done, click on the OK button. For the Squeeze Momentum, I want you to bring up the indicator panel. On the style, I want you to change all the colors to white. Then for the second plot, I want you to untick it. Click on the OK button when you are done. For the final touch, we would be adding 2 lines to the momentum as a gauge in the market. So go ahead and add your first line. I want you to set the coordinates to 0.070. This would be our green upper line. And for the second line, add to the chart. Now change the coordinates to -0.07. And that's it for these settings. We will now go ahead and backtest our strategy with an account size of $1,000. As we would be backtesting 200 trades, as well as risking 1% of account size on each trade. Let's dive into it. Okay guys, so we just finished the backtesting for this strategy. And we can see that we have a really amazing win rate for a 1:2 risk to reward ratio. We had a win rate of 60% in 200 backtested trades, having won 120 and lost just 80, which made us 160% return on investment. And I found those trade setups within 2 weeks. Any newbie can start applying this strategy immediately to have the shortcut to a better scalping experience. So overall, I'm definitely happy with the result. And the profit factor is looking amazing. For a 1:2 RR ratio, we had 5 wins in a row against 4 losses. Okay traders, let's now compare the strategy to some other strategy back-tested on this channel. In terms of return on investment, this strategy is really good, although not the most profitable on the channel, as it made incredible return no one ever imagined. Newbies should definitely try this out. 160% return on investment is really amazing for a short-term trade on a 1-minute time frame. You should probably test this strategy out if you want monthly profits from the market. If we take a look at the win rate, which is probably one of the most important metrics, we can see that the strategy is good as well, as it made 60% win rate within a short period of time. So make sure to add this to your trading arsenal. So yeah, traders, definitely give this strategy a try, and make sure you do the proper back testing and forward testing before trading live. By the way, if you have any strategy you would like to try out, please let us know on the comment section. Also, feel free to check out my other videos on our channel. I have playlists with different strategies and indicators that will definitely make you a profitable trader. All I ask for in return is to give this video a big thumbs up and subscribe to the channel, as it is absolutely free. Thanks for watching, and see you in the next one.